Hey guys, James here with Waterford Business Solutions. And really, the biggest thing that we work with a lot of clients on, outside of understanding their business, is also planning and preparing for taxes. Because we don't want to come to the end of the year and say, hey, congratulations, you made a ton of money, now you owe the government a ton of money. We want to make sure that throughout the year, we are considering where you're at every single month, at least every single quarter, and figuring out different ways that we can save you money throughout the entire period here to help lower that tax liability. At the same time, we want to make sure that based off of your estimated tax liability, we're paying in taxes as we go along here. Earlier, we went ahead and put out a video about why do you pay taxes, or more so, why do we pay estimated taxes? We did that back here at the beginning of September, so about a month and a half ago. And that's a big factor of tax planning. In addition to that video, which I encourage you to go ahead and go back and watch, in 2 weeks we're going to do another video about ways or some different methods you could use to go ahead and save money on taxes too there. So definitely encourage you to go ahead and like and subscribe to our channel. Go ahead and turn on notifications so that you get notified about that video coming out here in 2 weeks. And go ahead and share this video with anyone else so that they can be prepared to watch that video too. Now, as far as tax planning goes, it's not a simple thing of let's take a look at your tax return and see what you owed last year and pay in taxes based off of that. That is one version of it, and it's the most common version. Almost any time you're going to go to an accountant, even if you go to TurboTax or H&R Block or something like that, on your tax return, they're going to say, here's our suggested estimated tax payments. That is a version of tax planning. If you're expecting your income to stay pretty much exactly the same, you're not going to see any reduction in your income, you're not going to see any increases in your income, you're not getting a raise, you're not changing jobs, you're not selling a house, you're not selling a bunch of stocks or anything like that, then overall that version of tax planning will work for you. But it's a very base version that is super, super dependent on you have to be doing almost exactly the same thing year over year over year over year. With the clients we deal with, especially business owners, that's not the case. I don't care what client it is, the business is not going to perform the same year over year because the markets don't perform the same year over year. We're seeing slightly better growth here in 24, or excuse me, in 25 than we did in 24, but we're not seeing the same level of growth that we saw in businesses for where they were in 21 and 22. So we had great growth in 21, 22, but not the same level of growth here going into 24, 25. So if we were trying to plan our business taxes and plan our income taxes along what we did last year, we may be underbidding because the business is performing a little bit better. We may be spot on because it hasn't done too much different, or we could be vastly over because there are businesses that are struggling a lot more this year than they did last year. So when we're doing tax planning, we really want to go beyond that simple, hey, this is what you looked like last year, more into the what is going on this year. So whenever we're looking at tax planning, we do want to pull last year's tax return. We want to take a look and see, okay, we had this in wages, this in business income, this in investments, real estate, whatever it may be. Here's where all of our income came from. And we start with the baseline of that. Then we go line by line. Okay, on our wages, where are our W-2s looking at for this year? What's our last pay stub look like? Does it look like we're going to be having more W-2 income or less W-2 income? Let's go ahead and extrapolate out and basically say, as of today, this is how much I've been paid, this is how much I've paid into federal and state taxes, and so taking a look at that, Now we can figure out how many weeks are left in the year and where you'll be at the end of the year for any and all W-2s. And we can add all of that together to get an idea of your W-2 income and your W-2 withholding to give us a baseline start. Then we go down the line. Do we have rental properties? If you've got rental properties, how are those performing? Are those profiting this year, or are we going to expect to see some losses from those? Then we move on down to investments. Is it short term or long term? Let's start with short term. Did I sell any stocks, bonds, anything like that at a gain or loss this year? Well, if we sold that, that affects our earned income, our W-2, our business income, our rental income. But if it's long term and we have gains, we've got to look at what the long term gains tax is going to be versus the carryover for any losses that we have. So now we're pulling from your current employer or yourself if you're a business owner. We're pulling from, if you've got rental properties, the books from those rental properties. We're contacting your financial advisor if you have one and getting an idea of what gains or losses you've had on any trades or sales that you've had. So we've got to consider all of that there. Then we move into arguably the most complicated part of this, which is going to be estimating where the business is at. Because first and foremost, we have to make sure that the business books are taken care of, reconciled, recorded, and caught up to date on everything. If we're trying to estimate your taxes and you haven't done your books since August of last year and you're still waiting to do your taxes for 2024, we can't estimate your taxes on that. We've got to have the 2024 taxes done. We've got to have your books caught up, cleaned up, and pretty much 100% good to go there. Everything's got to look pretty much spick and span there. And if it's not, it's going to cause us some issues here in figuring out what those estimated taxes are. So super, super important. First and foremost, whenever we're doing tax planning, we've got to go ahead and make sure that your business books are clean. And I'm not just talking about, oh, I know how much money's in my bank account, or, oh, I know how much I sold this year. We've got to make sure that that profit and loss is accurate, that we know the net profit, that the balance sheet is accurate, that we've got everything pretty much tax ready. Because the more accurate those books are and the more tax ready they are when we are tax planning, the more accurate our tax plan is going to be. So that's why we encourage clients so much to make sure that they're keeping up with their books, and more importantly, making sure their books are tax ready every single month there. Both of those are going to be super important things to keep track of. Once we make sure the books are good to go, then we're going to need to take a look at, well, how did the business perform this year over last year? And based off of how far into the year we are we performing better or worse? If we're performing better, do you think we'll continue performing better throughout the year? Generally speaking, yes, but how much better are we going to do? Because if we're tax planning here in Q1 and your quarter one had a 10% increase, will that carry through to your quarter two, your quarter three, your quarter four sales to show us that we'll have a 10% across the board? Also, just because you made an extra $100,000 here in Q1 doesn't mean you're going to make $100,000 in Q2 or Q3. You could make $200,000 there based off of what your normal sales are. You could make less based off of what your normal sales are. So we've got to look at the business and its year-over-year performance and take a look and say, okay, this is how we're performing this year. This is how we performed last year. Here's the comparison. This is what we're thinking we're going to be at net profit-wise at the end of the year by running that comparison. So it's not a pull a P&L, throw a number on there, call it a day. We've got to figure out what the end-of-year profit of the business is going to be, and at least as close as possible. And that is really the most complicated part of this. W-2 is fairly simple. Your paycheck's not generally going to change very much. A rental house, again, fairly simple. We know what the expenses are going to be. We know what the depreciation is going to be. We know what you're charging for rent every single month. Even your trades, your stocks, your bonds, anything like that, your capital gains, that stuff's fairly simple. if we call up your financial advisor, they're generally pretty good at saying, yeah, we're going to do these few traits here, these few traits here, this may do this. But it's not a situation of you're paying based off of what the market's going to do and we're having to guess what the market's going to do. It's a situation of we're paying off of what you choose to sell in a given year. So we know what's going to come there. But with the business, it's 100% based off of market. So we've got to consider your high seasons and your low seasons. We've got to consider potential price increases and you missing an increase in your prices for materials. We've got to consider raises that you may give or bonuses that you give at the end of the year that aren't recorded on the books right now because you get those bonuses in December, but we're sitting here in October thinking about everything here. So that's not showing on the books yet. So there's so many factors that we have to look at when it comes to tax planning when you own a business. So it's super, super, super important that we've got those accurate books year over year so that we can do that analysis and figure out where we think everyone should lie and where we think everybody should end up coming out for profit or net profit wise there. And if we're not doing that, your tax plan is going to be woefully off. If we do this accurately and if we plan well, then we're not just looking at the books, we're going to be talking with you and saying, well, what do you plan on doing? Are you going to be spending a bunch of money on a rebrand? Are you going to be spending a bunch of money on upfitting a new office space? Are you going to be spending a bunch of money buying new vehicles or anything like that? That we've also got to take into account for this. And if we do this well, overall, your income at the end of the year shouldn't change too much from our initial plans. I mean, Q1 is going to be a little rough, but as we get into Q2 and especially Q3, we're going to have that final net income number pretty much locked in for you. And when we get that final net income number pretty much locked in, that helps us know, okay, this is what we're looking at the tax liability being at the end of the year. And we can now go ahead and either find ways to save on that tax liability, which is obviously the first thing we want to do, or we can cut that tax liability number into 4 different payments and make smaller payments of $1,000 or $5,000 a quarter here instead of doing huge payments of $20,000 in April of the next year. So a proper tax plan gets everything zeroed in, planned in, taken care of for you so that we have a decent idea within generally about a 10% variance throughout the entire year of where you're going to end after we kind of hit that Q2 tax planning meeting. But that's why it's so important to do tax planning, because now we're not going off of last year. If we're seeing a reduction in sales, we're reducing what we are paying into the IRS and to the state tax agencies, because you're not making any money by overpaying on those taxes. But we're also making sure that we're paying in enough that you're not going to get hit with a ton of penalties or interest for not paying in enough. Again, why we make those estimated tax payments, which I encourage, if you've got questions on that, you to go back and watch that video from September there. So that's really a lot going into tax planning, and that's why generally it is going to be working with a tax preparer, an accountant, an EA, a CPA to help you figure that out. It is many, many factors, but a good one will spend the time to talk you through and come up with a very solid tax plan to send to you. If you're wanting a tax plan and to better understand exactly where you stand this year and in future years with your taxes, that's one of the things here that we really work with our clients to understand. While we want their books to be accurate, we also want them to be prepared for tax season every single month, and so we do at least quarterly tax planning with a lot of our clients. So if you're looking for that or need help understanding that, especially if you're in the trades, HVAC, plumbing, electrical, general contracting, anything like that, I encourage you to go ahead and reach out to us here at Waterford Business Solutions. Shoot us an email at info@waterfordbusiness.com or give us a call at 864-351-0852. And as I said at the beginning, if you want to make sure that you get notified about our video in 2 weeks talking about how to save money on taxes, go ahead and subscribe to our channel, turn on that notification bell, and join us because we drop information every single Monday to help out contractors just like you.